Cramer. Welcome to Mad Money. Welcome to Cramerica. Other people, my friends, I'm just trying to make a little money. My job is not just to entertain you, but to educate, to teach you. So call me at 1-800-743-CNBC, tweet me, Jim Cramer. Park exhausts me. I'm talking about my handy acronym for Palantir, AppLovin, Robinhood, and Coinbase. These are four of the many stocks that seem to have no quit in them, even if they all pulled back hard into the close today, giving us a rare moment to evaluate them on relative weakness. It's better for me to talk about these stocks on a down day so you can get a discount if you're so inclined. These park names are emblematic of how stocks have devolved into a two-track market. There's the S&P 500, and then there's this handful of stocks that retail investors have anointed and relentlessly take up without any real bounds. Today, with the Dow dipping 19 points, S&P inching up 0.14%, and the Nasdaq advancing 0.38%, most of the park stocks ultimately took a breather, not a beating, but a breather. But if history's any guide, they'll bounce right back, probably tomorrow. Now, even though I say park, these four stocks are just representatives of what's been going on in this market. They're actually the best of the lot. They have earnings. They have analysts following them who come up with estimates. Although, judging by the way people have been buying these names, neither of them, those things like estimates and analysts, seems to matter at all. Now, you've got, you've also got the nuclear power stories like Oklo, which sold off hard today, or the stocks that make for electric, make better electric vehicles, like the back from the dead QuantumScape, which makes a new kind of battery that's captured the fancy of retail investors, although that wasn't enough to prevent the stock from plummeting over 14% today. Although even with that decline, the stock's almost tripled over the past month, as have many of these stocks. These same people will buy anything quantum, anything rocket-related, anything crypto, including SPACs that buy crypto. Why these? Well, maybe the better question is, well, why not? If you're an individual investor, you don't have much information about how stocks work longer term, it's pretty easy to play this game, and it is a game. We know there are parlays in gambling where you have to pick two or more events and all have to be correct for you to win. The payouts can be big if your parlay hits, but if any bet loses, you lose the whole thing. These are pretty similar, except you tend to win all three. In many ways, gambling on park is a much fairer, better game. But it is a game nonetheless. This morning, Carl Quintanilla, of course, now we're talking about squawk on the street, asked if I believe in this kind of investing. Did I think it had any rigor? My answer was simple. It isn't investing. It's believing in something that may or may not come true. These stocks are taking place in what I call the year of magical thinking, which is a nod to one of my favorite writers, Joan Didion, although she was trying to cope with the death of her fabulous husband rather than using it as an investment strategy. The buyers are irrational believers in these companies, not from grief, but from glee. I then talked about someone I met this weekend, get this, who bought Oklo, who truly did not know what the company did, other than it had like something to do with nuclear, and it went up a lot. True, Oklo's involved with fission power. It can recycle waste as fuel. It might have a future. When the stock hit 30, I was adamant that people had to be careful with it. But then, when it went up another 10%, I threw in the towel. I said, hey, listen, it's a speculative stock. If you want to own it, go ahead. It can be Oklo. It can be any part of the parks. It could be with strategy, the old MicroStrategy, or any of the SPACs that are being created purely to buy crypto. Or it could be Rocket Lab to supplement the rocket fleet for satellites. Oh, hey, how about Rigetti Computing? It's a quantum company. QuantumScape for faster electric cars. Joby Aviation, flying cars. Circle Internet Group, the red-hot recent IPO that I'm not particularly fond of because it's a stablecoin play. And pretty soon, because of that Genius Act, I think we'll be flooded with stablecoins. Now, I don't care which one you pick as long as you don't flood the zone with them. But I no longer try to stop people because there's just too much money being made, and I don't want to stand in the way of you making money. However, when you've got a big gain, you do have to take something off the table. That's the only time the discipline really does pay. What are the signs that the year of magical thinking might be over? Like maybe you think today might end it? I don't know. How do we return to rationality? Let me tell you what you need to see before this kind of thing goes away. I want you to know that we had a period like this in 1999 leading up to the dot-com crash. Things just kept going up and up and up, but the comparisons to the dot-com crash do not hold up under close scrutiny. While flying cars and experimental batteries don't yet make money, Park does. Lots of it. Oodles! Palantir, AppLovin, Robinhood, and Coinbase, they are all pretty darn profitable. By comparison, during the dot-com era, most of these red-hot companies had little to no revenues and were actually running out of money, constantly tapping the public markets at the same time that insiders were furiously sell their own stock because they knew there was no justification for these sky-high valuations. They got out. Most of the dot-coms were not ready for the prime time. This move, on the other hand, is unlike any I've ever seen, except for maybe 2014, which was filled with tech success fueled by the rise of the cloud. But it ended when insiders sold a huge amount of stock into a host of underwritings. The cloud stocks then fell under their own weight. That could happen. If you were to contrast that with now, while we've seen some insider selling, we haven't been confronted with the avalanche of new offerings that usually stymie red-hot stocks. Normally, there would be tons of new nuclear and quantum and crypto IPOs to the point where the supply would ultimately overwhelm demand. That has not happened yet, at least not yet. Now, I'm reading a lot of stories about how these companies are way overvalued and have no business being this high, to which I say that means nothing to the buyers. Remember, we have two markets. There's the market that plays by the rules, and here I'm thinking about companies that report and go down because they don't meet expectations. And think about like a Netflix or American Express, more on them later. And then there's the second market, the red hots, which tend to get a pass either because there are no expectations or because the buyers don't want to be confined by something so pedestrian as the four walls of the spreadsheet. They think these estimates are for small thinkers. They think big. They don't want to be an octa where the expectations are hard to beat. They want to be an oclo where there are no expectations. Will they ever be tempted to go into a traditional stock? Only maybe a few tech stocks called the Magnificent Seven, but those are no longer so reasonable because they don't have to beat the expectations. I'm saying they have to beat the expectations. I'll give you an example. Alphabet's going to report this week, right? Its stock was up big. They have to meet the expectations, if not beat them. I wonder if people will care who are part of this meme trade, there I called it, which is Park. With the exception of NVIDIA, the Magnificent Seven are not exactly a part of the year of magical thinking. But when you see a digital galaxy or a quantum computing, just remember to play it as it lays. Here's the bottom line. Aside from the occasional pit stops like today, the Park stocks just keep running. And until we see a wave of new IPOs creating a supply glut and a ton of insider selling, I wouldn't be surprised if they continue to rally. Let's go to Larry in New Jersey. Larry.
Hey, Jim, big booyah to you. Hope you're having a great summer.
Larry, it's been a terrific summer. I haven't caught enough fish. But in the garden, like the sun, what's the problem here? How about you?
Good. You can't ask for a better summer. The weather's been great. Anyway, I'm a new recent club member. Company I'm calling about recently reported earnings in June, $5.06 EPS, beat estimates, $5.87 billion in revenue, even guiding higher, albeit slightly lower margins. You know them as for Photoshop and the standard for PDFs, Adobe. Going from 420 down to 360s now. What's your stake? Buy, hold, or sell?
Boy, Larry, I got to tell you, this is a tough one. One, keeps going down, but two, Figma's about to come. And you know a lot of people have switched from Adobe to Figma because it's much cheaper. Let's let the Figma deal come and then see what happens. Might get this thing at a cheaper price. I want to go to Chris in New York. Chris.
Hey, Jim, this is Chris calling from Buffalo, New York. Third-time caller.
The home of the bee-bouts. Yes, let's go to work.
I was looking at a stock last week, and then it got a real bad downgrade right before the weekend. The stock is CoreWeave. What do you think about it?
I think I like CoreWeave, and I like Michael N. Trader, but I would say the stock is $60 billion, and it's going to have to come down and cool off a little bit. There are too many shorts in it. The shorts are covering right now. Once they're finished covering, I think the stock does drop, and you can take a look at it then. Let's go to Brian in Michigan. Brian.
Good afternoon.
Good afternoon. Go ahead.
My question is, I have a little Boeing that I bought.
Then get more Boeing. Get more Boeing. They report this week. I think it's going to be a terrific quarter. Let the stock come in. If it comes in down, let's say it comes to 220, here's what you want to do. Buy. Pull the trigger. All right, these Park stocks, well, they keep running. We got a little bit of a break today. That's why I wanted to do this piece. They don't care about the headwinds or fundamentals of buyers. The only thing that could slow them down are maybe some new IPOs, maybe a lot of secondaries. Now, on Mad Money tonight, American Express fell after earnings, so what gives? I'm digging into the quarter and sharing if this might be a buyable dip. Then Netflix, another stock that fell after earnings, boasted that they had 95 billion hours that have been watched on this platform so far this year. So why wasn't that enough for Wall Street? Is anyone going to work? I'll give you my take. And Cleveland Cliffs soared 12% today. So what should we make of this incredible comeback? I'm going straight to the source with the CEO. He doesn't really care for Chairman Powell. Stay with Cramer.
Don't miss a second of Mad Money. Follow at Jim Cramer on X. Have a question? Tweet Cramer. Hashtag Mad Mentions. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.